Good day and welcome once again in the event that you're joining me for the first time. My name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the best-selling author for several books. And two of those books are Billionaire Codes and Manager's Toolkits. I'm the best-selling author for these two books. Today I want to introduce a new series that I'm going to be starting, and that series is titled Mega Money Investment. Yesterday, or the last program, we looked at land asset acquisition, asset leverage, and asset protection, and I want to encourage you to look back at the last program because what I did, I looked at land asset, a number of portfolios that represents land asset acquisition. And what I want to further emphasize is that there is a primary and there is a secondary nature to land asset acquisition. And there's an active and there's a passive approach to investing in land asset. In looking at land in the last broadcast, I'm going to only briefly look at that today, but I want to encourage you to go back and look at it. I did say that when it comes to investing in the primary land asset, there are four portfolios for you to understand. The portfolio that I dig a little deep into was metal. And those four areas, primary land asset that you can invest in, is metal, precious metal, agriculture, and energy. All of these sectors are multi-trillion-dollar industry to invest in. And that's the primary area of investment. The secondary portfolios of investment is where you're going to find real estate. And in terms of real estate, you're going to be finding residential real estate, commercial real estate, and industrial real estate. And if even you decide to invest into real estate, there's also an active approach to doing that and a passive approach to doing that. Today, what I want to do, I want to do a short program, but I want to look at the passive income versus active income cash flow strategies, because I've heard the arguments very often that active income will always beat passive income, and we will look at that and see which one you think is more practical, and at the end I'll tell you what are the best investment portfolios and what are those portfolios that I'm actually investing in. Now, one example that I want to give is, let us suppose that you have 50,000 USD or 10 million GYD, and you want to invest that into, let us say, real estate as a form of performing asset. Now, to take that lump sum of money and to put it into ownership of a real estate asset, it's a good thing, and it has some advantages and it has some disadvantages. But let's look at this. You take 50,000 or $10 million and you invest it into real estate. How much money is that likely to generate? What is the ROI and what is the NOI? One being the net operating income and the other being the return on investment. And we'll look briefly at all of that today. Because if you're going to make in the investment, remember you are getting into these investment portfolio because you want to cash flow them. So it's important for you to ask yourself the right questions before you actually start any form of investment. So you acquire an asset at either 50,000 USD, the equivalent of 10 million GYD, and how much money is that asset likely to generate on a monthly basis. Now, let us suppose that you have two well decked out units, rental units, and you're renting each one of the unit for, let us say, 500 USD or 100,000 GYD. So the two combined is going to be giving you either 1,000 USD or 200,000 GYD. Now, what you need to do to come up with your NOI, your net operating income, is to ask yourself, what is going to be your monthly operation expenses? Now, some of the expenses to look at may entail you take a loan from the bank, and your monthly obligation to pay your principal and interest, let us say that comes up to about 110,000 GYD or 550 USD. Other expenses might be you have to do some small kind of maintenance on the asset that brings it up to, let us say, roughly 120,000 GYD or 600 USD. So what is left back is what we're going to call your NOI, your net operating income. So what is left back from the earnings of 1,000 USD is 400 USD, or the equivalent of 80,000 GYD. Now, so your net operating income for the month is going to be 80,000 GYD or 400 USD. You have to now ask yourself how comfortable you are with that. But regardless of your level of comfort with that, you also have to extrapolate this for 12 months. All right. So when you calculate 400 USD for the entire year, you're likely to come up with approximately $4,800, and that is a net operating income. Some might say, I'm quite comfortable with this because $80,000 a month for 12 months can take care of you. The other person might say that is totally inadequate. But what I want us to do now is to measure your net operating income, because remember, that is passive income, that is active income, because you own the asset. But in owning the asset, you have to take care of the mortgage payment, you have to take care of, take the interest of your tenants, you have to take care of everything necessary in terms of managing that asset portfolio. So what I want you to do is to measure the income coming in from the active portfolio, and that is owning the assets and managing the asset, as again simply passive income investment. Now, a passive investment portfolio, and if you understand the right passive investment portfolio, you can take that same sum, which is 50,000 USD or 10 million GYD, and you put it into a passive dividend paying account, a high yield dividend paying account. Now, on the stock market, you have a range of those portfolios. You have S&P 500, you have Vanguard ETF, you have a number of those portfolios. You have real estate investment trust. At the right time, we will go into some of the best portfolios to put those monies in. Let us say you take a real estate portfolio. And if you understand the market well enough, there are some of those portfolios that can give you between 7% return per annum, 10% return per annum, 15% return per annum. Let's look at the 10 and 15%. Now, let us suppose you take that entire sum and you put that sum into a high yield dividend paying investment portfolio. By simply putting that money into the investment portfolio, you are going to be walking away at the end of the year with not 4,800 USD, but you will be walking away with 5,000 USD. And you at 10%, you're going to cash out a annual yield or annual dividend payout of 5,000 USD. And that is 200 USD more than your active income portfolio. So in this case, you can see that a passive income in portfolio is paying you more at 10%. A 10% annual yield with an investment of 50,000 USD, you walk away with 5,000 USD. And at 15% dividend yield, you walk away with 7,500 USD, the equivalent of 1.5 million GYD. So it is very clear here that depending on your dividend yield and selecting the appropriate investment portfolio, your passive income cash flow can give you much more than the active income cash flow. But having said that, I want to also give you some additional information because there's advantages and disadvantages that I think is important for you to know. Now, owning the asset, it means, yes, that you have to do all of the maintenance, you have to pay your fire insurance, take care of the water bill if that's not transferred to the tenant. You have to look at the entire portfolio. You have to be able to manage that portfolio. So it takes away from your time, all right? It takes away from perhaps an income earning possibilities because you have to commit the time to this. Some of the other negative things to look at here or disadvantage is that if you get a water leak or a roof leak, from the net income, the NOI, you still have to take monies from there to address water leak, to address ceiling leaks, or any other damage the asset in itself may have. You have to manage that portfolio, so it may deplete your NOI. We'll go later on into things that you should do before you come up with your accurate NOI. You need to put aside monies for the foreseeable risk and possibly the unforeseeable hiccups that can come in managing that portfolio. So that's one disadvantage. The advantage of passive investment is that you don't have all of those responsibilities because the portfolio manager that you're invested in, or the portfolio you're investing in, the managers of those portfolios will have the ownership and the responsibility to take care of the assets and manage that asset portfolio. Another advantage to look at is, one, when you own the portfolio, you get something that we call asset appreciation and you get asset leverage. And that's something that is beautiful because the asset appreciation is what compounds with what we call your ROI, your return on investment. So you have invested 50,000 USD or 10 million GYD in a real estate portfolio. So today the value of it is 50,000 USD. But within 2-3 years, you get something that we call asset appreciation. And the asset appreciation comes in two ways: forced appreciation or natural appreciation. Whichever one comes, you benefit from it. Now, the asset appreciation can sometimes go high. You can get 10, 20, 25%, 30% of the asset value that is going up in appreciation. And to cash out on that's where you get some major ROI, return on investment. If even you don't decide to cash out on it, you have asset appreciation, you have asset leverage. And what asset leverage means, you can leverage the equity in the asset to generate additional cash flow, which can go into other real estate. So that's an advantage that you have. Now, if you are as a passive investor, you don't have that advantage. All right, you only have that advantage if the portfolio manager decides to liquidate the asset. Based on the value of the asset, you may have a cash payout on the portfolio. So that's where you get some asset appreciation. But in terms of asset leverage, you don't have the leverage as a passive investor as against if you're an active investor in the particular portfolio. So these are some important things for you to understand about money, how money works, about smart investment portfolios, and how to start to position yourself to start making some mega money in 2020 and beyond. I know that the world today is faced with COVID-19, and many persons are going to be asking yourself, what are the best portfolios to be invested in at this particular time? Because the stock exchange market is affected, the real estate markets are being affected, metal markets are being affected, but hear what, there's still tremendous demand for a number of products and services in the world. And it's important for you as investors to understand these portfolios. One example that I want to give, there's an increase in demand for medical supply. So let us suppose that you are invested in a health REIT or a medical service REIT. And it simply means that those portfolios in terms of stock value is going to be raising. So if you're fortunate enough to have a stock in this, or can even buy a stock today in those markets, you're going to be getting significant yield, all right, because there's global demand for those products. Along with this, if you perhaps are invested in a food manufacturing industry, you have an industrial REIT, and those are portfolios that are likely to also give you significant return, regardless of what is taking place in the world today. I'm saying this because of the backdrop that all is not lost. There are some portfolios that is going to fall on the stock market. There are some investment portfolios that will certainly not do that well. But the important thing for you to do is to ensure that you have this knowledge, or you're working with a financial advisor that can help you to navigate this whole process. One might want to say this is not the best time to own assets. It's not the best time to be in business. And that's very subjective because highly dependent on the kind of business portfolio that you have. Now, when you come into the Mega Money Media, Mega Money investment portfolio, Mega Money Capital, we will work with you to really help you to understand these different portfolios and how to make informed and educated decision as you set yourself up to navigate the financial world. At Global Branding and Marketing and the Mega Money Media, those are the two companies that we're working with. We have designed some very, very unique programs to really help people across the world to understand money, how money works, to understand the global financial system, and really know how to position yourself to leverage this market. I keep saying that knowledge is power. Knowledge is power. We learned that for many years. But it's not enough to just have knowledge. It's not enough for you to just have this financial knowledge. Because I would say that if knowledge is power, the application of this knowledge is your superpower. And you want to do everything at this stage to ensure that you can truly activate your superpower in becoming financially independent. So I want to encourage you to reach out to us at Global Branding and Marketing. Reach out to us at Mega Money Media, and we will be so welcome, so willing, and to work with you to help you understand more as to how you can develop investment portfolios and leverage these investment portfolios. And just let me tell you a little bit about these companies. You see, at Global Branding and Marketing and Mega Money Media, our mission is to position our clients, employees, and strategic partners to understand, create, and leverage passive income cash flow, build multiple streams of income, leverage smart investment strategies in order to build generational wealth. Financial intelligence goes way beyond your ability to make money or maximize your disposable income. It addresses the issue of understanding the global financial system and leveraging this intelligence to create good debt cash flow, minimize your existing debt financial portfolio while you maximize financial and equity capital gain. The understanding of the commercial financial sector, the investment financial sector, and smart capital market are an essential body of knowledge for you to have when you want to navigate the financial world. I must say it has been a pleasure being with you today. And again, my name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature. And I'm the best-selling author for Billionaire Codes and Managers Toolkit. Be blessed and see you in the next podcast. And do protect yourself against COVID-19. If you have any reason to go to get your groceries, I want to encourage you to cover your mouth and cover your nose and make sure you have on your shades, because the three places that COVID-19 is coming at is your eyes, your nose, and your mouth. The other simple advice that I want to give you is to build up your immune system. Get your vitamins, your vitamin C's, and build up your immune system, so as you can give your body that fighting chance to defend against COVID if you are compromised in any way. I want to encourage you again, do everything to protect yourself and your loved one. See you in the next broadcast.